All right, good morning and welcome to another video. My name is Michael Essien and I'm doing this for the sake of a huge demand and, of course, um, request as well. So please pay some very crucial attention to this video because it's going to change or rather improve the way you trade crash and boom and the way you see those indices going forward. I have done about 6 videos on crash and boom on my channel so far. You can take your time to go through all of them. It will help you and it will do you a lot of good. So this one is basically for buying crash for a long time. Maybe we call it swing buy of crash or swing sell of boom or swing sell of crash or swing sell of or swing buy of boom, right? There is something that is very key, something that is important, is very crucial, is paramount, is fundamental that we need to observe before we take that decision. And that's why I'm starting with my notepad because I have outlined, I've written a few stuff, and I want you to go through them. We'll be going through them together because I'll be showing you as I read it here. I will take you to the chat environment so that you can see what I'm talking about. I may not be flipping through a lot of all the 4 assets, but I will use 1 or 2 example to be able to bring home the point I'm making. But first, I want to encourage you to go through the previous videos that I have made. Everything is still based on the parameters or the setup of the previous videos. We have not done, there's no change in the indicators we are using. It's just the way we look at it, the way we interpret it. In my first video, I've always said that there are 3 modules of trading. Actually, you cannot be a successful trader if you don't go through or if you don't understand these 3 modules. Number 1 is the setup module. Number 2 is the interpretation module. Number 3 is the application module. These 3 modules are very important. That's to say, if you do not understand your setup, you can't interpret it. So you should be able to understand the setup that makes up a strategy. By setup, I mean when you bring together different moving average, you should know what they represent or what they do. Now, when you do that, when you bring together different moving averages or indicators, so to say, that now forms a whole and forms a strategy from that. That's the setup module of it. And then you should be able to interpret in detail what those setup does or what they represent. Is very important. Okay, it's very important. And then after that, if you be able to interpret it, you should be able to apply it. And that's to say, and that is why even if you copy my setup, if you do not know what they mean, you will not be able to use them because they have to come in that order. So those are the 3 modules of trading. You must be able to know these things. So go through the previous videos, ask questions. However, let me just tip this in, although I'm going to say it again towards the end of the video, that there are a lot of persons what I'm trying to do here is to help you, is to encourage you that look, it's possible to to learn this thing and become acquainted with them. And so, however, if you want to be guided, if you want to to belong to a community of people that are trading crash and boom only, and you want to do well, because in that community, my community, I call it the Michaelesian B and C community, right? That's how I call it personally. Okay, I will have people who are awesome. They are learning how to trade crash and boom very well. You can chat me up or whatever using the link below to make inquiries about my community called. I'm talking about the mentorship community, so that you can be schooled and properly guided on how to trade crash and boom. All right, so that's by the way. But let's get back to the video. Now, checklist for swing buy of crash and swing sell of boom using retracement and re-entry signal. Very important. I want to lay emphasis on the retracement and re-entry signal. Now, one of the things about why people exhibit the fear of buying crash is because as soon as you just place a buy, before you know it crashes 3 times and you run on a loss. Could be a loss of, depending on the loss size, could be a loss of -60, and you know that it will take some little time before the Marathon 60 cancels out and take you into profit. So people have the fear of, for those who don't, who don't have the swing trading mentality. As soon as they just place, maybe after like 5 minutes, maybe they could see they were making $10 profit, maybe 20, and then all of a sudden, before they look away from their phone and look back again, the thing has crashed like 2 times or 3 times, and then they are into huge negative, and they're like, will this thing not continue crashing and all of that, and then they close the trade. Okay, so that's why people don't always buy crash. Or maybe you want to sell boom. As soon as you place a sell on boom, before you know, after like 5 minutes, maybe we're making some little profit, it's beginning to spike, and before you know, you're in huge negative, and you're like, will it ever sell again? And then you quit. So because of that, it is generally advised that you should buy boom and sell crash, because the boom, when you buy boom, the spikes takes you into an advantage, because it takes you into huge profit over time. But there are a lot of people who also blow account buying boom, right? Because when you're buying boom, boom could be selling. So the question is, how do I know that I'm not supposed to be buying boom, but rather selling boom now? Or I'm not supposed to be selling crash or buying crash, but I'm supposed to be doing this? Well, everybody in a way will become victim of some of these things. But that's why I want to do this video this morning, so that I'll be able to clear something. I really pray and hope that this will help you, or maybe clear some things for you. All right, first and foremost, checklist for swing buy of crash and swing sell of boom using retracement and re-entry signal, very important. Now, if you must swing a buy or sell of any of crash or boom, one key thing must be seen on a higher time frame. I want to say that again. If you must swing a buy, let's just say if you must buy crash or sell boom, one key thing must be seen on a higher time frame. And that thing is the MA cross, the MA, the moving average cross. Now, which moving average are we talking about? The moving average cross is a powerful signal for both buy crash, sell crash, buy boom, or sell boom on a long-term basis. Now, on a long-term basis, remember we're talking about swinging here. So where do we get the idea from? Now, like I said, entry is paramount. Entry is one of the most important key things in trading, because it is not if your analysis is right. The thing is, where did you make your entry? Your analysis may be right, but you have a huge drawdown before you begin to get into profit. The idea is there a way the drawdown can be reduced? Yes, of course there is, if your entry is top notch, is spot on. So let's get back to where we were. So the MA cross is a powerful signal for both buy crash, sell crash, buy boom, or sell boom on a long-term basis. I call it the power of the moving average cross. Right now, please follow me closely too. You may want to write down these things so that it will stick to you. It will stick in your head. The strength of this cross becomes more stronger with respect to a higher time frame, meaning that if the cross is seen, don't worry, I'm going to take us to the chart where I can be explaining this thing. Meaning that if the cross is seen in a higher time frame, the trend and the directional momentum of the asset in question will be very strong and lasting until a counter cross occurs for directional buyers. I'm going to explain this with my charts. I want to say that again. The strength of this cross becomes more stronger. That is to say that if you find the cross in a higher time frame, maybe H1, H4 daily, all right, the trend, that is the direction at which the cross represents, the momentum of that trend, of that direction, will be very strong, and it will last also until another cross within the same time frame takes place for you to change your directional bias. That is exactly what that is. I'm going to show you practically. So the strength of a directional momentum is directly proportional to the time frame of the MA cross. That's to say, if you must stay in a trend that is lasting, that has a strong momentum, you must have found out that the cross also took place or was observed or seen in a higher time frame. I'm going to show you what I'm talking about. These things are so real and they are easy as it is. So a cross in a higher time frame begets a strong move, while a cross in a small time frame begets a weak or a short move. This is how it works. So completely directly proportional to the time frame where the cross is found. So here's the checklist. Let's go back to the first thing, and then we will, okay, let's look at the checklist. To swing a buy or sell in crash, as the case may be, we are going to use buy in this example. Then you can apply it to sell of crash, can apply to sell of boom, can apply to sell of of crash or whatever, or buy of boom too. Now understand that the same principle works in as much as it is crash boom. I also want to say that this strategy so far works with step, works with V75, but my focus as always will be on crash and boom. Now let me say this very quickly. Some persons are tempted to jump from one asset or one instrument to the other. There is no wisdom in doing that, because the aim and the goal of every trader is to make money, right? So if trading only one asset can give you money, can meet your daily target, or what I will call your demanded targets, right? Now, if that is possible, there's no wisdom in going after other assets that may get you confused. I believe in focus, and then I believe in mastery. So if you want to learn V75, you learn that. If you want to learn how to trade step, you learn that. But don't allow your trading space to be so complex that you are trading so many things at the same time. It derails focus, and it's not good for a trader who wants to go very far. So try to stay on an asset. There are persons I know who trades only crash 500, for instance. There are people I know who trades only boom, and they don't even trade crash and boom. They just concentrate on boom. Either they are buying it or they are selling it, and they still make money. In fact, they maximize deals opportunities, and they understand it. That's what mastery does. It makes you stay, it streamlines your options to what you don't necessarily want, but what you really need. For example, I don't necessarily need to trade V75 step or maybe V100 to make money. In as much as I can trade boom and crash, and then still make whatever money I would have made putting all together, then there is no wisdom in changing, to having to analyze different assets. Okay, so that's by the way. So please, let's go back to where we were. So I'll take us to the checklist. Let's assume we want to buy a crash. The first condition is that if you must swing a buy, or let's say if you must buy a crash or boom, depending on the asset you're dealing with, the MA cross is a powerful signal for both buy crash and sell crash, buy boom or sell boom on a long-term basis. Take this as a long-term. Now, we've talked about, these are just preambles. So what is the first thing that we must check? A certain major trend. All right, here's a checklist now. To swing a buy of crash or selling crash, but let us look at the first part, buying in crash. A certain major trend. Make sure that EMA 22, that is the blue EMA, and the 10, the red EMA, have crossed over each other clearly in each one. That is, if you must buy crash, this must happen. The first thing is that the 22 EMA and the 10 EMA must have crossed over each other clearly in H1. The cross must have taken place in H5, progresses to M15, sorry, to M5, M15, M30. But you can only be sure when this happens in H1. Now let me take you there. So let's go here. Sorry, I had to put my phone on airplane mode because there will be a lot of chats and a lot of notifications, which I don't want. So the first thing is done. Let's look at this. Is crash 500. It's actually an active trade. It's just that I had to pause it. I don't know what it is doing now, but there are a few things I'm going to show you, which may not have reflected in the checklist note, but I'm going to show you that. The first thing I said, I've said it in my previous videos, because this thing doesn't really change. It is exactly the same. The first thing you need to do, or the first thing you need to check, is that there must be a cross of the red or the red and the blue. And this is what I'm talking about. I hope this will help us. You see that? Where I made that circle is the cross of the red and the blue. Right? Good. Now, after the cross, okay, what else? Okay, after the cross, sometimes it's difficult to use these things like this. Okay, after the cross, something else happens. I'm sure you can see the yellow. The yellow 48 is basically used for trend direction. It helps you to determine the direction of the trend. For example, If you check, all of this is still above and the yellow is here, so the momentum is still right, it's still a bullish momentum. This is just a retracement, as the case may be, right? So we'll get to that. So but in as much as there is a cross, and then the yellow too, the 48 yellow is trending below, that is to say the candles are formed above the 48 SMA, we can say that this is a bullish trend. This sell you see is a retracement which can be avoided. You can avoid it from hitting you. So how do we do that? Let's go back to our checklist. The first condition has been met. Look at the first condition here. There is a cross of the red and the blue, crossover rather, of the red and the blue moving average. Okay, on H1, good. So the next thing is that that is to a certain major trend. They say clearly in H1 is clear. Now for a buy crash scenario, let's assume you're buying crash. The blue 22 EMA must cross over the red 10 EMA and the candles above the crosses in H1. Why the candles? This is what I mean. And the candles above the crosses. The candles are above the crosses. Do you see that? The cross took place here and the candles are forming or are trending above the cross. That's the first condition which we are seeing here. Now in H1, and the yellow 48 SMA also crosses too with candles above the 48 SMA. That's what I said. And the what do we say here? After this cross, the yellow also crosses. So from here we launch our buy. So this has been buying for a long time. That's a long buy. You know what that means? You would have bought for how many hours? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Close to 14 hours, right? But could you have swing for that 14 hours? Yes, it's possible if you understand. So let's get back to where we were. Now, where did we stop? For a buy crash scenario, the blue 22 EMA must cross over the red 10 EMA very correctly, and the candles above the crosses in H1. Make sure that this thing must be found in H1. And the yellow 48 SMA also crosses 2 with candles above the 48 SMA, period. However, this buy must be supported by a price action signal around a support zone for further confirmation. Okay, so let's go back there. What we are saying is that for you to know that this thing is actually going to happen, you must consider other factor. Okay, you must consider what other factor. This is what a factor I think you must consider is that, was this thing happening around support? Was there really a support zone around here? Sure, there was. If I have to go to H4 for an instance, you will discover that we had this cross around a support area. Okay, somewhere there. So we know that we're very close to support. So we go back to H1, you will discover that there was actually a support right around there. So that's a price action situation scenario. So we know that that is actually around the support. There's a support not very far away from the support. We now have the cross. Does it make sense? Actually, we were able to spot a support. You see that? And then we had a cross just immediately after the support. So we know that we are buying. Remember, it is generally said that you buy around the support, you sell around resistance. Okay, plus or minus. So the you must find a price action situation that supports it or that further confirms it. So that was settled. Good. Number 2, entry. Like I said, entry is paramount. That is why I think this video is really about entry. Okay, yes, we can spot the signal for a long term, but the long term is not as important as understanding the entry. So as soon as condition 1 above, that the first condition I just showed, the first condition is met, entry is very paramount to avoid huge drawdown, because if you don't know what to do, you don't know where a retracement ends and most likely where it will begin and all that, you may be tempted to just enter at any point because you have found, well, it will not be bad provided you have a very good, huge equity and you want to swing. But you see, but for us to be top notch and be, to be clear cut in our entry, one of the things I like to say here now is that your entry determines the shortage of your emotion. Let me say that very well. I say your entry determines the shortage of your emotion, because if you get an entry that gives you a huge drawdown, your emotions will begin to play out. You're like thinking, should I close or should I hold? And let me tell you how fun the thing is. You're holding, maybe the thing crashes on you, you're buying crash, and you're running minus $20. and then all of a sudden it begin to cancel out and gets you to maybe 15 minus $15. Then another drop comes and takes you to minus 30. You are still shaking, and then after that it drops again, takes you to minus 45. You close at that point. But if you had checked carefully, the way you have minus 45 would have likely been where you would have entered the buy, but that is where you close it. It has happened many times. I'm sure you will agree with me. So the entry is important. Entry will help you keep your emotions in check. So as soon as condition 1 above is met, entry is paramount, of course, to avoid huge time. Having satisfied rule 1, wait for any of these re-entry signal. Please write it somewhere in your notebook so that you can always remember. I have it in my head, and I've said in my previous video, I've talked about these things. In M15, if you are using M15 for your re-entry, wait for a crash to sell and hit or near the pink 55 EMA. Then enter a buy there. That is to say, you must wait for, let's go to M15. Let's assume we're in M15. And we said, look at, after we have gotten that cross, now take note, this is where we have all these ones, we missed it. We wanted to be sure. So we are waiting for a crash, right? We're waiting for a crash. Good. Our first entry, however, would have been, remember, if you have to go through, my video. We're saying wait for in M15 for this crash to take place, and hit this line you see here is a 55 exponential. So you would have made your entry here, and then this is 15 minutes. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. About 12 candles of 15 minutes for each candle you would have been buying this long. And remember that you could also see when this crash will take place. I have taught us that in my previous video, so you can avoid this. Except you want to swing for this, you can allow it to cancel back and then continue buying up if the case. But it depends on your choice. Now remember this, let me say this before I leave this point. If you want to swing for a long time, then you have to use higher time frame like we're trying to analyze here. But I don't believe in just trading aimlessly. You should be a target-based trader. Why a lot of people fail in trading is because they are not targets guided. They just want to trade as it comes. Somebody who doesn't have a target for a day, for a week, for a month, it doesn't have a long-term projection and all that. And so it becomes a serious problem. And so for those people that are in my community, we are target-based trader. We are working on a plan. This is how much you want to make, and then we grow over time. Not just wake up and you want to make so much money. I'm not saying it's wrong to make so much money if there is market opportunity, but try to be a target base. I said that because I don't know why I will want to be buying from here to this point and I will allow it to cancel me back to my entry. That will be foolishness. Remember, each candle represents 15 minutes, so I would have been buying for close to 4 candles is 1 hour. I would have been buying close to 4 hours, and then after buying for 4 hours, I will also wait. These crashes that will take place within 30 minutes will cancel out my effort of 4 hours. That's not wisdom. So there is a way to know when this thing will start crashing or start selling. And I have taught it. I've talked about it in my previous video. You have to go watch it. So that's what I said. And let's go back there. If you're using 15 minutes for your entry, wait for a crash to sell and hit or near the pink 55 EMA. Then enter a buy there. Okay. If you're using M30, wait for a crash to sell and hit or near the blue 22 EMA. Then you make entry being an end of retracement signal. The 22 EMA is actually for end of retracement. I've said it in my previous video. Let's go to M30 and see what happens. Yes, in M30, take note, we are considering the first entry, our first entry, right? Okay. So you see, the 55 was here, but in M15. But when you come to M30, the 55, where we had the 55 as re-entry point for M15 is where we have 22 EMA as re-entry point in M30. Take note of that point. So if you're using M30 for entry, then you must allow it to crash and touch the 22 EMA. I prefer the M30 because I like working with the 22 EMA. The 22 EMA serves as end of retracement signal. Like it helps you know where a retracement will end, and then a new entry will likely be. So that is that. So I would have made entry. Take note, this is 30 minutes. 2 candles of this is 1 hour. So we have 1, 2, 3, about 3 hours buying before it started crashing. And could we have seen these crashes that is coming, yes, we could have seen it. And how possible is that? Because I have taught us divergence. Yes, I've taught us divergence. Even if we know that there is a cross, I've taught us divergence. This is price creating higher high. I may not draw it very accurately because I'm explaining something. Price is making higher high. In any system, we must know that, and the oscillator is making, lower high. So that's a case of a divergence, right? And then we have the sell come down. We may have a little more sell, who knows? But we trade what we see, not what we think. We trade what we see, or what the market gives to us. So that's that. So we could have avoided that sell. I would have avoided it. So watch the whole video. It will help some things clear. Now, but if you must use H1, wait for crash to sell and hit on near the red or 10 EMA. Let's go to H1. If you want to use H1 for your entry, this is what it's talking about. This point, let it touch there before you start buying. You would have been buying from here to the top there. Or they say in most cases, allow it to touch the 22. And if you see, it's still touching the 55. So if in as much as this structure is not violated, what I mean by structure not violated is that in H1, there was no cross, except this becomes a cross, right? Then we can say, okay, we are going to start going down. But except this becomes a cross, no way, we are going up. Look, there was a cross here and it sold from here to this point. There is a cross here and it bought from there to where it is. So these things are things that we can check, and we can study. Let me take us to some things. Very, very important. There are some things I want to draw attention to, which I said was not, captured in the notebook. I want you to put your eye here. If you want to swing crash, always look at where you have your stock. When the green line stock crosses over the orange color, and they are all pointing up, we are likely going to have a few push upward. That is if and only if this cross does not take place, which I doubt. So you must also, with all of this, you must also check where you have your stock crosses. They are very powerful signals for entry and also for exit. For those of us who understand our extensive exhaustion points way of trading, you know that we make use of the stochastic and of course the RSI 6. So anytime you see this, take note, this is zoom level 3. You see your RSI at this level, just expect that there's going to be a crash coming down. So these things are pretty simple and it's very clear to the eye. And I just want us to subject ourselves to more training and more learning. Now, the same applies to sell crash and buy boom on a swing or long term. Let me see if I can take us there. Let me see if I can take us there. So my position is still running on a negative for now. Let me see if I can take us there. Now, look at this. Let's look at this. Same thing I talked about. This is a H1. Okay. Now, for this boom 1000, we had a cross here on H1, and that's why we had this buy that took us to this point. From this cross, that's a long buy. Okay, before we now had this reversal forming a double top here and came down and all of that. Now take note of this man here. Take note of this man here. That's where this thing begins. So we must be very sensitive. These things are purely simple and they are very straight to the point. Now let me reiterate for emphasis a reason. Let me take us to H4. Good. Please, I needed to show us this. You see, the higher time frame has a stronger hand than any lower time frame. When you find a signal on the higher time frame, even if lower time frame will be saying opposite, which is normal, stick with the higher time frame. I love what I'm seeing here. You see, I will not be surprised, however, if I see this man selling more. I will not be surprised. And of course, I have no reason to be surprised. This is why. I have said it before. Maybe I did not emphasize. Anytime you see the 22 blue now crossing over there is a crossover of the 200 and the 22, just like what you're seeing. Remember that I said this has been a sell trend, crash 1000, boom 1000, right? Remember that I said that the blue 22 serves as what? End of what? Retracement. Don't you ever forget it anywhere. This is what will help you to trade your V75 for those who understand. Anytime you find anywhere you've determined a trend, listen, let me use this to draw. There is no way a trend can go, on a straight line forever. For example, you cannot have a situation where boom is buying forever. No, it's not possible. What you will see is that boom will buy, sorry, boom will buy, it will retrace, it will buy, it will retrace, it will buy, it will retrace, it will buy, it will retrace in a wavy manner. That is how every market normally should work, because market is supposed to create higher highs and lower lows depending on the structure you're looking at. There is no way market can go in a straight line. It's not possible. So there are going to be impulse and correction. Very important. So but the question is, how do you know that a retracement has ended for a trend that you have, that you know early? For example, I had said before. Now, if you check what is happening here, you will discover that this place is 22 EMA. Now, this was selling. Then all of a sudden, it starts buying. This is pullback. This buy you see here is a pullback. It only pulls back to touch the 22 EMA. That means end of retracement. Take note, pullback is another word for retracement. So after this retracement, which we could have bought, we don't miss everything. We don't miss anything. We buy everything, we sell. Now, after touching that retracement, end of retracement being the 22 EMA, what did he do? After touching it, just see, it just touched it. Look at it, it just touched it. And then after that, it started selling. How do I know that this thing will sell long? Oh my goodness, I know that it's going to sell long. The possibility of selling long is very high. I will give you 3 reasons why I say it will sell long. On H4, there is a clear crossover of the 22 moving average, exponential moving average, and the 200 EMA. So anytime you find that cross in any asset, is a jackpot. It's going to sell for a long time. So what that means is, and that is first reason I say it's going to sell. The second reason is this, except something in another miracle takes place, but we can watch out and check this video later and see where this market has gone. The second reason is that, look at, there is a crossover of the stochastics, and this thing, anytime you find this kind of crossover on a higher time frame, it means that this man must also come down and also have a crossover at the bottom for us to start thinking of buying it. I don't know if I said that very well. Let me say it again. You see, we have gotten the first reason why we say it's going to sell. The second reason is that, look at this man. There is a crossover of the orange and the green. And for us to consider a buy, the both of them that are trending downwards must also come down and begin to form, something here at the bottom, at the 10, for us to begin to consider. Maybe we may have a double bottom, who knows? But until that, I think this thing is going to sell and come to the bottom. Because first, there is a cross, this cross, and secondly, these two. So that is a clear point. I'd like us to follow. Now, let us go to another reason, D1, why I said it is going to sell for a long time. And please quote me anywhere. This is going to sell for a long time. I don't make mistakes with this kind of stuff. As always said, okay, if you say so, what happened to these stocks here? Now, please remember that the biggest and the strongest of all signal is not the stock. It is the cross of the red and the blue. Anyway, the market comes with surprises, but I believe so much in a structure. Now look at what is happening. There is a cross of the red on daily. Don't be shocked, or what I would say, don't be shocked, alive, if that English is correct. I hear people speaking more often these days. Now, don't be shocked, to see this come down to this point. Don't be shocked. In the long term, in the long run, I'm not saying that it may not even spike and begin to go up, but what I am saying now, you can quote me and mark and use this, remind me this in the next 1 month or 3 weeks, God helping us. I am seeing this thing come down here, that much. So we may have a very long sale in Boom 1000. I'm very sure of this. Please mark this video and then remind me in 3 weeks time. Let's see where it is. I would like to call our attention to this setup in 3 weeks time, because what I'm seeing is this long sale. Remember that in the multitude, or in the long sale process, we're going to have, even though it's going to be selling, we're going to have a buys opportunity. But I see a long-term sale. That's what I see. So if you're a swing trader, I will encourage you to use a sizable lot size, not a big one, and then just swing it and leave it. Okay, let's see what happens. That I suspect a very long sale, and nobody should think of really buying but 1000 with the mindset of swinging it. It's not going to help. So this is how we do analysis. And all it will need right now is for this to break, just like when we were selling this to break out, something like this. All we need is that to break out. As soon as this breaks out of that trend line, we go down for a long time. And my eye is on the 22, the 200 EMA. This man, I'm looking at this man in the long term. It may not happen in 3 weeks, it may not even happen in a month's time, but this is where I'm looking at the end of the day. So that's what I'm looking at. Okay, 11414 as the long-term TP. That doesn't mean we're not going to have some buy opportunity. We will. But when we're looking at a swing, directional buyers, I'm looking at that long distance. So that is that for crosses. Remember the power of the cross. This is a moving average cross, which is part of the emphasis. But now, how do you make an entry? Look at where you would have made an entry if you wanted to sell. Right? There's a double top here. If you wanted to sell, this is where your entry would have come. As soon as you see this pullback that touches the 22 EMA, the 22 EMA, like I said, is end of retracement, is for re-entry. I would have made my entry there and just leave it. That doesn't mean that it could not, it may buy, but overall, I see a sell. All right. So let's go to crash 1000. Yeah, crash 1000 has been really buying, and it's really crazy. But the problem, we're waiting for the sell to come. Now, why did we have this buy? And why are we even having this long-term buy that is going crazy? It's simply because of what I've been explaining. And look at it. There is a cross of the red and the blue on daily. Anytime you see this cross, just know that you are dealing with a long-term situation. Look at that cross. I'm going to try to zoom it out. Look at it. You see that? You see the cross? The red crossing over the blue on daily is a long-term buy. I saw this, and my prayer is let it just come back for the sake of people who are holding onto sell opportunity. But anytime you find this, just forget it. It's going to buy, and then when it gets to a satisfactory level, before we can consider selling it. But that is the truth. That is the utmost truth. And the question is, why is the sale not coming? The sale will come eventually. But you see, the power of the cross cannot be overemphasized. We cannot overlook it. It's very important. It's very paramount. It's key in trading as far as this is concerned. Now we are having a cross. Let's go back to our boom 1000 so that we see what is happening. The same cross that we have in crash 1000 on daily is the same cross we are having right now in boom 1000. So what do you think is going to happen in the long run? I see a very long sell. So that's it. Let's go to crash 500 again. And then the crash 500, look at what is going to happen in crash 500. In the long term, well, I'm looking at a long-term buy too, because first and foremost, you see, analysis is practically very simple if you know what you're doing. Like I said, when we have a range, go through my previous video. I think all we need is for this man to break out of this range. This is it daily range. When he breaks out of this daily range, I want the cross of the red and the blue on daily to happen in the nearest future. The nearest future, it could represent the next 2 days or 3 days. And when that happens, we're going to see crash 500 buy for a long time. Please, you mark this. Mark is going to buy for a long time. And I see it buy to this point. It might buy to this level, or maybe first level should be around here. Okay, 9 should be our first level, and then finally you can think of going here before we look for another opportunity if there is. So that is that. Let's go to boom 500. We have a position running. Okay, so what am I looking at? Why am I considering that it's going to buy? Well, let's go to my H1 first. Okay, I consider a buy because one, there is a cross of the red, like I've said before. There is a cross of the red here, and then this yellow has just crossed. So we're actually going bullish, no doubt. That is actually the first thing. Let's go to H1, see why we would have said so. Now, actually, why it's going to also buy more is because when you come to H4 again, there is actually a cross of the red and the blue on H4. So we're going to have, it's going to break this assumed resistance and it's going to shoot up. Let's get to daily and see something. Well, in daily, we do not really have anything to look at, but our H4 is satisfactory. So we are considering it getting to the yellow, this level, God helping us. So somewhere like that. Please, I'm not doing analysis. I'm just showing you based on what I'm trying to explain that the cross has a lot of energy, has a lot of power. So when next you want to buy crash, consider these things I have said to you. Go through this checklist. All right. I'm going to write out this checklist. Okay, write them out. Go watch this video over and over again, understand it, and ask questions. I'm going to drop a link, or you can also be part of the mentorship group where we share ideas and we do a lot of stuff together. And I know that as far as trading is concerned, we have people who are willing to hold you by the hand. I am one of them. And then they will show you the way to go around it. I wish you the best. Please watch all my videos and make sure you take your trading seriously. There are a lot of things that borders on trading. It's not just the technical aspect of it. You must be emotional intelligence, you must be socially intelligent, and of course that's how to gain financial intelligence. So I wish you well, and please watch this video again, ask questions where you don't have clarity. Market can can play a funny one. I pray God helps us. And thank you very much for listening. Have a good time.